You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time once again for the second episode of the bi-weekly options extravaganza known as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we think so, Options Insider Radio Network. Reminding you, if you're just listening to the old OB, A, we love you, B, you're missing out on a heck of a lot. So get on out there, grab the full network. Then you get Options Boot Camp, Options Playbook Radio, TWIFO coming up a little bit later today. We don't know why CME closed out the equity pits over there in the options world at CME. We'll find out later today. We got them coming on a little bit later on TWIFO, a whole bunch of other fun stuff going on. Micro Bitcoin futures, yep, going to talk about that too, and a whole bunch more. Of course, you got always so many other shows. Our interview show, you got Crypto Rundown, you name it, Advisor's Option, Vol Views on Friday. So get it all, grab the network. And of course, wherever you get it, Apple Podcasts, Audible, Spotify, wherever the heck you get our stuff, make sure you keep rating and reviewing. Really just help all the new folks who are discovering the world of options these days also discover our content and keep sending those questions. We do love to hear from all of you guys and gals out there. Let's see who we're hearing from today. First, let's go out. You know, it's a day that ends in Y. That means it's a dark and stormy night on the shores of Maine. Always gloomy, always overcast and dire around the GIOVINAZZI fortress, where we find none other than the Rock Lobster perched far above it in his little tower, the one light gleaming on the shore there as he looks down across the fortress-like compound there and out across the dark and stormy shores of Maine. The Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of the GIOVINAZZI fortress-like compound. Mr. Rock Lobster, welcome back to the program. How can you see through all that fog and darkness, sir?
You know what I know? I feel like right now I'm in the Hound of the Baskervilles. You put me in that scene, that Sherlock Holmes scene where I'm across the moors. Like you, of course, how do you see across it? You have a small candle lantern that you wander through the moors, looking away to escape the dark gloom. So
there you go.
All I have, of course, is just the light from my flickering computer screens as I try to contact folks from the outside world.
The light of your screens and the warm embrace of Volman, all you have to keep you warm, sir.
Correct.
All you need is a Darestalker cap and perhaps a nice pipe. And you, too, can be Sherlock. By the way, those are not original Sherlock accoutrements. Pro tip, a little bit of trivia, actually created by an actor in Connecticut named William Gillette, who got so famous off of his portrayal of Sherlock Holmes on the stage, he built a castle there in Southern Connecticut. I've been to it many times. So yeah, he made so much money off adding those little bit of accoutrement to his performances of Sherlock. They became so popular that they became kind of the way we know Sherlock today, even though I defy you to go back into those books and find a Darestalker cap. You cannot. But I digress. Let's instead go out to the land of St. Charles, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. A, welcome back to the program. And B, are you a fan of a good Holmesian mystery every now and then, sir?
I guess, but I have to say I'm not at the level that you quite are. So I didn't know that was another one of your things, Mark. You're a very deep man.
Many wells of mystery swirling over here as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
So there you go, everybody. Next time you're at a party, whenever those happen again, and you need a little bit of trivia, a little bit of bar trivia, you can stump them with that and say, hey, that hat, all that stuff, it's all made up. It wasn't part of the real Sherlock. But you know what's not made up are these markets today. Well, I guess that kind of depends on your point of view. If this is all real or if this is just complete madness, what we have going on out here these days. It's kind of a little bit of back and forth. Coming into the start of the day, we saw markets kind of struggling, some of them going in the green, some others deciding they wanted to dance with the devil, head a little bit red. Coming into the start of the show, they were pretty much all ticking green. Now, it looks like NASDAQ has ticked red again, ever so slightly. It's slightly off from unched listeners, but a little bit off to the dark side. S&P right now still in the green, up about 1/3%. And we have Dow up about 0.5%. So Dow leading the charge yet again. That means all this kind of the market's trying to figure themselves out today. It means the vol products also kind of trying to figure out what they want to be today. Coming into the start of the show, we had VIX that just broken through the 19 handle to the dark side, right around 1895. Puts it up almost half a handle. Not quite, but almost half a handle from where it was on Monday's show. VVIX at about a 110 to kick off the show. That puts it up about 2 points from our last show. VXX, a product that loves to fade, kind of got the reverse fade on throughout the earlier portion of this week as we saw vol popping a little bit there. I guess Yellen kind of thinking she's the Fed chairperson again. All of a sudden talking about raising rates. But that's a conversation for another day. She spooked the heck out of everybody. And vol got a nice boost. Now VXX coming back down to about 39.40 as it kicked off the show. That's up about exactly 0.4 points from where it was on Monday. And vol Q. Remember we said for a while, it seemed like it was kind of locked at 20. It finally budged. Got up to about 22 right now, about 2 points from where it was this time last week. Let's go back around the horn, the opposite of the way we came. Let's start in the land of St. Charles. Mr. Uncle Mike, sir, what's lighting up your tape on this kind of bit of a wishy-washy back and forth week, sir?
Yeah, it's kind of like I'm just watching this and just do something already, market. If you want to crash, you know what? I have hedges in place for certain things that I have the sudden crash hedges ready. You just go ahead and do it. We can deal with it. We'll lose a little bit of money, but with the pullback, it'll give us more of an opportunity to make more in the long run. So I'm cool with that. Or if you want to rally really high, I'm cool with that too. But for right now, it's just I got the toothpicks in my eyelids right now, just sitting there. And it's like whenever the S&P moves 4 points, I'm getting excited, like, oh, something's going to happen. That's how boring it's been lately. So I wish it would just kind of do something with it. But what is doing something right now that is pretty exciting is silver. Silver's making a little bit of a run lately, and SLV up in the mid-25s again, close to the highs of the day today. So kind of excited about that. That's something fun to watch. And so we do have that. So apparently the people are looking to get some commodity exposure. And then also in the commodity world, not so much today, but we have had, actually it's down a little bit today, but with crude oil has been moving quite a bit lately. So we definitely have that running. And so we might actually be getting some type of inflationary concerns or inflationary trades where people are flocking to commodities in the interest that we might be getting some type of inflation coming. But in terms of whether inflation exists or not, it just seems like it's like just with Yellen talking about rates, and it's all a mystery. But here's the bottom line: stuff's more expensive now than it was a little while ago. That's definitely the case in my world, or even in St. Charles, where it's not gloom and doom, and we don't have fog and Sherlock Holmes lamps and things like that. I mean, here it's pink fluffy unicorns dancing on rainbows, by gosh. And but stuff is more expensive, so we do have that. Banks are continuing to rise. XLF is also up on the day-to-day over the 37 mark. And I think just where this is at, what's holding this market back from giving us a really powerful rally is a couple things. Number one, I think it's taken a break for a little bit. We had just a really big April like we had. But number two, we're not getting a lot of tech support. Didn't just thought of the play on words that I just had with it. We're not getting a lot of support from tech. So would love to see Apple rally a bunch, Amazon rally a bunch, and the FANG names. We're just not getting it right now. So in looking at it through our portfolios, through RCM, a few things with which, just to kind of give you an idea of it, our covered call portfolio, it's not really moved that much recently, but what I am looking at through our dividend portfolio for our dividend paying stocks, which are more of the stocks that we're just looking for income, like the like BMY, Gilead, IBM, AbbVie, and there's 25 other stocks along those lines. So please don't read into any of those as a specific recommendation. But of those have actually been doing pretty decent. So I think a lot of dividend paying stocks and a lot of the financials have really been holding this market up, and the tech stocks have really not been doing a lot with it. And so I think that if we can get support from tech, then this would really give this market a shot in the arm. And if more people would get their shots in the arm, then that would also give the market a shot in the arm too. So shots in the arm and tech support. That's what I'm watching today. And what's really scary is that I didn't even think about that beforehand. Those words just came out.
You're full of puns today. You're a punster. And you didn't even know. By the way, I didn't get the memo. I was kind of busy earlier this week. Is the silver squeeze back on? Should I dive back in, Uncle Mike? Is now the time when the squeeze is going to work, sir?
You got to give me some code words before I can reveal that.
Oh, okay. We'll talk off the show then about the very secret, uber secret silver squeeze that is going on right now. Uncle Mike gets the memo before I do, listeners. That is not fair. All right, let's go on out now to the shores of Maine. I think he could see his screens. It is very dark and stormy over there. Mr. Rock Lobster, sir, as you're hanging out in the gloom, Volman, your only friend, your only companion, what are you and Volman keeping an eye on, sir?
Well, did anyone see that launching candle in the SPX today? I don't know exactly who said what. I'm still trying to find out. But in about a 5-minute session, SPX was looking like Palookaville, 41.55-ish, and launched up 30 handles to 41.80 and change. Who the heck knows what is going on? Very, very odd. We're down, 41.30, something like that today, 41.49. So, however, VIX is not going down. It kind of hovered in the red area a little bit, but it is very resilient. So what I think, this is just kind of a similar pattern as we had last year, January, where the market's not moving very much. It's going up. Well, I think in January it was really going up very hard. Now it's not really going up anymore. So volatility in the short term and the options gets lower. That presses VIX down a little bit, the 30-day vol, because all the volatility in front of it, all the weekly vol is pretty low. But there's kind of a dearth of sellers in the back. Nobody's come down and will hit. Basically, nobody's willing to take sell options to take VIX below 16. That's the story. I think 16 at least is the new 12 until everybody knows what's going on with the COVID and everybody gets what might happen with this massive spending thing. Apparently, we have $6 trillion that we're going to spend. I think those currents cause investor concern. I also think this Pfizer thing was not well taken by the market, or the drug companies made a deal with the government. The government gave money and said, "Go figure this out." They signed some deals, and then here you are after the vaccines have been made. The government's like, well, we're not really going to keep that deal. I don't think that is a great, it's not good for the moral hazard. It's not good for, okay, well, are they just going to sell out patents when they don't want them? I don't think it's a great idea. I think there's a lot of ways to get that production going as much as possible. But I think just changing the laws willy-nilly has never been very successful. I think it does a lot of damage because, everybody, we've had the rule of law, which is ultimately the only thing that separates us from most other countries. And, when the government decides to just go break it for the heck of it, break their deal, that historically has never been good. So I think that was not a positive. Pfizer was on its way to becoming kind of rocketing up there, and now it's down. I think it was trading 41 plus yesterday, trade as low as maybe 38 today. I have to admit I did sell some puts in there, 38 level puts. I still think it's very positive. Like the development is going to be positive going forward for drug development. I do like several of the drug makers. I think they're trading pretty cheap multiple right now relative to other stuff. But I don't see how that was in any way positive. Because they're probably developing, the vaccines as fast as they can currently. So anyway, again, like I said, I disagree with that as a policy. I think it's poor. And the drug companies that were most affected by it got kind of slammed. But as far as the market goes, like rallying SPX and rallying VIX, it rarely ends out well. So I don't know what actually happens or how it's going to end up, but normally it just does not end up very well. So you like to see that vol come in. You like to see the willing sellers of options, and that usually leads to more bullish stuff, and we're just not having it yet. I think the last thing is a lot of stuff in our chat room is like the Cathie Wood Fund or the ARC stuff. Having kind of a hard time lately. It's just not, it looks like it's about to break through the lows we had in March, but the QQQ is not close to that level. So I think the very bleeding edge of technology companies, maybe a lot more of that value is coming out of there. That could lead to more selling. But for right now, it's kind of holding there. So I think those are like a couple of cross currents. And to be honest, I think more unsexy businesses are going to become more sexy. And then I'll just finish it with just crypto. So every time I look at StockTwits or Reddit or anything, like it's all this, like people aren't going to invest in stocks anymore. Why bother when you can buy a Dogecoin and it goes up 40% in 3 weeks or something like that? Like, why bother? I mean, so at some point, I don't know when, but it will kind of come tumbling down. But it could last years, who knows? So a lot of, anyway, as far as the markets are always exciting, but this time I think there's just a lot of stuff going on, and ultimately vol is not coming down, and it's hard to keep a bull market going without willing sellers of options, and that's where we are right now. So I agree with you. Like we're very close to all-time highs still, but that vol is just not. It's just. Again, to me, it's still a pretty strong market signal. So we'll see how that all goes. But
to paraphrase the Rock Lobster, buy Dogecoin. That's what I'm hearing from you right now. That's what you're telling the folks. Buy the Doge. Yeah, because why not? He's going to appear on SNL. That's worth at least 20 to 30% rally in an underlying. Is it not a comedic performance over the weekend? Yeah, I'm with you. It is head scratching and interesting. The ARC stuff, maybe not so much. People probably realizing they don't need to pay somebody else or buy their product to buy Tesla if they want to go out and do that. So not that much mystery there. But yeah, the crypto side, always mysterious. We're going to get into that more a little bit later on TWIFO, listeners. So stay tuned. How long have I been holding CME's feet to the fire? You got to have a smaller contract. You got to have one. They finally listened to me. So we'll talk all that stuff coming up a little bit later, in a little over an hour on TWIFO. Right now, let's see what's lighting up the markets. As Uncle Mike says, he's kind of waiting for the markets to do something. We're kind of seeing that reflected in the options paper right now. VIX at about 181,000 contracts on the tape right now. The ADV still shy of 500,000, 491,000. SPY, similar story, 2.25 million. So that one has actually exceeded half of its ADV ever so slightly. ADV is a little bit north of 4 million right now. The S, 532,000. So looking light out in S land as well. The ADV, 1.15 million. The Qs, again, the Qs are one of the few you expect to be moving because they're kind of having some trouble finding their footing today. And that's kind of what you expect. Almost 800,000 contracts on the tape right now. That's closing in on their ADV of 1 million, pretty much exactly. Small caps also putting a little paper up today. 363,000 contracts for IWM. The ADV, 481,000. Let's move on out to the single names, most active, see what's lighting it up. It seems like it's mostly post-earnings names that are diving in today, which, again, not surprising. It is that time of the year, listeners. Number 10 cost you 204,000 contracts to break into the top 10. So that's not bad, listeners. I mean, it's not like 150,000 or something like that, but it's also not 250, 280, or 300,000. Number 10 gets you to Rocket Companies, 204,000. So they're back on our top 10, back on our radar right now, having their post-earnings blush to the dark side right now, off about $3.20 or nearly 14% to about $19.60 right now. Number 9, it's a perennial top 10er. It's kind of always in there somewhere. AMD, 208,000 contracts. Number 8, what the Rock Lops are just talking about, Pfizer, they're moving a little bit and generating 231,000 options contracts to boot, as the Canadians like to say. Number 7, Viacom, 235,000 contracts. Number 6, the Amazonians back in the top 10 with 247,000. We're at number 5, and we're just barely north of 250,000 listeners. So it's that kind of day. Number 5 is Neo, 266,000 contracts. Number 4, Uber. Uber back in the top 10 as well. By the way, both Viacom and Uber are also in the post-earnings blush / malaise. Let's see what Uber is up to right now to see which way it's moving. Oh, yeah, it's feeling the malaise as well, off 8.5% to about 46 and 7/8. Remember the old 7/8? That's right about where it's hanging out right now, getting the old fractional days. Oh, the good fun we used to have. Speed fractional math on the floor of the SIBO. You thought that knowledge would never come in handy, listeners, and there you go. It can make or lose you fortunes in the old days of pit trading. All right, number 4, Uber, 393,000. Number 3, Palantir, 397,000 contracts. That means we're all the way up to number 2 before we finally break through 400,000. Actually, a little bit beyond that, to 754,000. You know what it is. It's Tesla. That means number 1, the big dog, looking kind of light today. Apple, 850,000. Even though it's worth noting, it is going ex-div right now, so that should add a little bit of extra juice out there, and yet we're not seeing it. 850,000 contracts on the tape. But you know what we are seeing, listeners? It's the numbers. They're hot off the presses in our hot little hands from OCC. One of the big questions of this year has been, can the party continue, such as it was? Obviously, 2020 was not a party for many reasons, but from an options volume perspective, it very much was a party. Can the party continue into 2021? So far, the answer has been a resounding yes. We had March being the most active month ever, January number 2, February number 3, Dece number 4. Let's see how we stack up here. The numbers are in now for April from OCC. OCC reporting that their April 2021 total cleared contract volume, 715.6 million contracts. It's up nearly 30% from a year ago. Remember, April of last year was no slouch, and yet this is up 30% from that. It is the highest April volume on record. Notice they're not saying it is the highest month on record. I'll have to go back and pull the numbers for March and see how this compares, but clearly it did not beat March. But still, on a year-over-year basis, looking pretty aggressive. Let's see, year-to-date ADV through the end of April, 40.1 million contracts. That's some paper. That's up 44.1% compared to this time last year. Remember, 2020 was no slouch. The busiest year ever in the history of the options market. And so far, we're up 44% from that, which is just mind-boggling numbers here. Total, remember, OCC clears a bunch of stuff. Let's drill into the options. Total listed options volume, 711.3 million contracts, up 29.6% from last April. Equity options, drilling down further, that was 674.2 million contracts. That's up 30.7%. Cleared ETF options, 189.4 million. That's actually a 20.6% decrease That's interesting from April of last year. This is kind of interesting as well. Index options, drilling down even further, 37.1, almost 37.2 million contracts. That's actually up 12.4%. If you've been listening to these for a while, you know, kind of index options and futures have been kind of the two dark spots for pretty much every cycle, every month for the better part of the last year. They've been down almost every month. This time, no, up 12.4% from April of last year. Same deal with the futures. Remember, OCCs are pretty much only clearing VIX futures these days, and they've been kind of in this downward spiral ever since the death of XIV. This time, total futures cleared volume, 4.2 million contracts. That's up almost 59% from April of last year. So perhaps some bright spots in this otherwise interesting report here as well. Mr. Rock Lobster, I'm curious for you. A, do these overall numbers surprise you that April's still a pretty rock'em sock'em month? And then B, perhaps even more surprisingly, that index options and indeed VIX futures volume were also up last month, sir.
I mean, we had, it doesn't surprise me hugely just because of, well, I'm going to say stimulus dollars, right? Those stimmy checks. How much money went in? Like, it's crazy. I think people are either paying debt or they're putting in the stock market. I think this month, though, they're all going to put it into Dogecoin. But it does not surprise me that because things were still moving, stocks are still doing crazy, crazy stuff. And when we commented at the time, like, it's not going to happen forever, and that generates volume. I mean, you buy a call for $2, it goes to $50. I mean, that's going to generate some volume. I would not expect, unless something unreal happens, that those volume numbers carry over though as we go forward. So I got to put my curmudgeon hat back on in the dark and stormy castle and say I don't see that happening this month.
I can always look to you, put a little rain on my parade out there, sir. And I'm sorry, Mr. Rock Lobster, OCC does not clear Dogecoin, so I cannot report to you the numbers for that. But I will look out. I will look to see if I could find the Doge numbers. All right, let's keep on rolling here. Really quickly, look at some of the earnings fun. We still have a bunch of earnings popping off. Like I mentioned, it's a pretty active week. We had Chegg on Monday, Pfizer, CVS on Tuesday, and then we have Under Armour, Activision Blizzard, T-Mobile on Tuesday as well. Wednesday, GM, Hilton, Uber, Marathon Oil. Thursday, we had Moderna, Viacom, Square, Roku, Peloton, AMC getting out in the Mimi land, Beyond Meat. Tomorrow is DraftKings. We've got some reports here for earlier this week for Estee Lauder and PetMeds. We already hit on those on our last show. We've got some more coming out. Should be right after the show, so stay tuned to the website for those. Meanwhile, Season looking a little bit better. It's at about a 64% right now. It's up from the mid 50-odd% recently out there. So looking a little bit better, but still underperforming from an overall volume, or I should say overall just volatility perspective. Speaking of volume, going back to volume really quickly, I mentioned April, 715.6 million contracts. I said, was it the number one? It was the number one April on record. Number one month overall? Probably not. Pulling the numbers up from March now. March total cleared volume, 904 million contracts. So that is still the number one month of all time. That is the bar to beat. That's a pretty impressive bar. You're closing in on 1 billion contracts in a month. But nonetheless, April, a couple hundred million or close to it. Shy of that, we'll see if this is the rage or if more things will happen. We are heading into the summer months, sometimes not the most volume-heavy months out there. But again, this year is like none other, so we shall see if the old patterns hold true. Now it is time to see what our Eye of Sauron has in store for us. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
And my producer is pointing out to me, lest I besmirch April unfairly, March did have more trading days. So that also is going to add to the total there as well. And April had, of course, an Easter holiday in there. So there you go. My producer wants to be fair to OCC. And I concur. That's a good point. All right, let's move on out now to the land of the Eye of Sauron. Let's see where it hails first. Like I did there, pun hail, because we're going out to Uber. You don't really have to hail them anymore. No, you just hit a button on your app. So not quite the same thing, but we'll go there nonetheless. Uber, of course, ticker symbol Uber. UBER, trading right now, as we just mentioned earlier on the show, 46.80, off about nearly 440, or about 8.5%. Let's look at the year that's been out there, because Uber, of course, kind of the standard bearer of the sharing economy, and sharing and pandemic don't exactly go hand in hand. So kind of a bit of a rough period for Uber and all those related type firms out there as they're trying to find their footing in an era where everyone has to social distance and no one wants to go near anyone and no one wants to share anything anymore. So a year ago, they were trading $27.82. Let's look really quickly to see how low they got. Yeah, they sold off in the madness, $21.33 at the height of the sell-off back in March. They had rallied a little bit coming into this point of May 6th, $27.82. They got about $6 and change back. And they kind of bounced in that range for a while. They got up to, on June 8th, everyone's favorite day, $37.08. So looking pretty good. But they kind of gave it up, got back down to the mid to high 20s again. And they kind of vacillated in this range from the low 30s to the mid to high 20s again, and back and forth and back and forth. They were trading $33.41 on October 30th when they looks like they had a good report, because they shot up to the moon pretty quickly after that. By, let's see, November 9th, they were trading $48.18. So they had a nice little pop there from about 33 up to 48. And then they kind of kept rallying. They got up again to, looks like about 50, almost 55 in December. And then they got up to, again, they rallied again to about 59.5 in mid of January. Then sold off a bit down to, looks like about 48 and change. And then rallied right back up again in February. By February 10th, they hit 63.18, which is close to their high of the year. Their high of the year was 64.05. Then they kind of sold off again down to 51 and back up to 60. They did this dance a few times. And now they're kind of coming back down the other side of it, listeners, back down to where we find them right now, about 46.75 or so. So it's been an interesting, tawdry tale of the tape over the course of the past year for Uber. Let's see what our Eye of Sauron found out here. Obviously, this is all post-earnings, so should be kind of interesting. A lot of paper hitting the tape, as we mentioned just earlier in the show. We had Uber putting up here, I can scroll that quickly. There we go. Uber had already put up almost 400,000 contract listeners, so pretty active day. But our Eye of Sauron zeroed in on a few of them nonetheless, peering through the hurricane, trying to find the nuggets for you folks out there. AUG doubles seems to be where our Eye of Sauron has found its gaze falling today. The AUG double, a.k.a. AUG 55 calls, going up. First off, we got a block of 11,018. Interesting number. Going up for 278. By the way, they were offered at 258. So someone had to get these bad boys going 20 cents through the offer, or that market was just pure crap one way or the other. Then we saw, actually, let's see how quickly. Actually, right before that big block of 11,000, we saw 2,000 more coming in for 272, kind of right off the offer there, 2,108 times. So, yeah, interesting stuff. A 2,000 lot, 2,100 lot going up at 948. Then about 2 minutes later, we have an 11,000 lot coming up and through the offer. So clearly, something weird happened with this market, because they're lifting offers, and then 2 minutes later, the market is almost 20 cents lower. That doesn't make any sense. They clearly, that's a bad print or something along those lines, a bad quote, because they're still trading 278, trading above where they were. So clearly they are buying these. It's just a strange one nonetheless out here. So AUG double calls going up, lifting offers over here. Mr. Rock Lobster, we were at a 46, about 75 out here when we kicked off this segment in Uberland, kind of selling off again. As I mentioned, though, it has had a few flirtations to the upside, about as high as 64 over the course of the past year. So what are your thoughts on this? Looks like about 13,000 AUG doubles. Somebody had to have them, Mr. Rock Lobster.
So I have to say, you really want to buy those?
I do not, but I am not the person putting up 11,018 and then 2,108, sir.
This is one where, I think Uber is kind of going to go back and forth with it was the state of California, and wasn't somebody from the state of California now in the Biden administration, and lo and behold, the Biden administration now does not like the gig economy. So, whatever, I'm sure we're going to have this, we will be saying this for the next 4 years. Just not basically Uber responding, or just the stock is responding to, again, earnings not great, but also, if they reclassifying workers and all this kind of stuff, that's going to be harder for Uber. So at least right now, the last thing I would want to do is buy calls. I could see maybe selling some 30 puts in Uber, or 35 or 40 puts or something like that. It does not give me a lot of hope for a quick bounce. So again, those were kind of odd fills. It's possible somebody wrote those calls, but the way they traded, it looks like somebody was just trying to force a huge purchase through. So,
by the way, speaking of huge purchases, a total of nearly 50,000 of these. I just pulled it up because it seemed kind of odd to me. It seemed like there was more afoot here to keep the Holmes reference alive. The game is afoot. Yeah, almost 49,000 have gone up today, sir. Most of those lifting offers.
Yeah, I don't know who's buying them. I'm just looking at the volume now. It's like kind of chunked volume. But our rule, the first day you buy them and you're already down a bunch of money is never great buying calls. So that does not give me a lot of hope or heart in the success of that purchase, but I could be totally wrong. But let's mark that one to see how they're doing in about a month. Come back and revisit that.
Yeah, and they've been bidding this vol up from a low 43, 42 level up to over 47 and that 11,000 lot when we saw. Another sign that they're buying these, listeners, is that the vol continues to go up here. So yeah, we'll keep an eye on these. This is a lot of paper here on this double strike, and we'll come back to these pretty soon because we'll probably have a sense pretty soon of how these are faring. They got themselves some time. They didn't go out to May. They went out to August. So they got a little time. What are your thoughts? AUG doubles in Uber for about a 47 vol. You like those or no bueno? What is your thought on those as we keep on rolling? Let's go back now. Let's pay off some more of our bad boys we've talked about here on the show. Let's go back to March 22nd. If you can remember that far back in this just heady maze and malaise of a market that we're in these days. Everything's coming fast and furious at you these days. We're going to go back to March 22nd to everyone's favorite Bill.com holdings. At the time, we profiled 10,368 of the April 115 puts going up for 65 cents a dime off the offer. Off the bid. They're 55 cents at $1. The stock was 153 and about a half when these bad boys went up. So they were about 25% out of the money. These weren't exactly the most aggressive of lines of sand, but it did seem like someone was drawing a bit of a line in the sand there at that 115 strike. There were earnings, but not in the cycle. The earnings are today, May 6th. So they got in a little bit ahead of the old earnings dance. Let's see. The stock on expiration, we had a little bit of some vacillation, but it ended up going their way. Remember, they wrote the 115 puts, 115 listeners. Well, the stock didn't exactly go in that direction. In fact, it continued. It was at 153 and about a half when they sold the puts. It continued to trend north as of expiration. 160.73 is where the stock went out. So these 115 puts looked pretty safe. Our friend looks like he kept Mr. Rock Lobster his roughly $673,000 for being brave enough to draw that line in the sand on the 115 strike. Mr. Rock Lobster, if you too were brave enough to do that, you could have had $673,000 right now, sir. What do you think of this one?
You know what? I keep telling you, it's always about as much as a Ferrari, isn't it? It's never like hundreds of millions of dollars. It's always around like 250 to $1 million. Just saying.
That's a nice Ferrari. 673. You're getting in some pretty nice Ferrari territory there. Yeah, I might go for a Lambo myself. That's my personal preference, but to each their own.
I don't have much use for a Ferrari in the dark, stormy hinterlands of Maine. But
can you put snow tires on a Ferrari? Is that even legal?
I don't know. Well, I heard they have an SUV now. Like some kind of crazy.
I think they all do. Lamborghini does. They all have an SUV. That's all anybody buys, right?
I could be totally wrong. I actually have to Google it, So I guess I could use a car. That would be kind of cool. Anyway, I look at this and I go, how often do we see the line in the sand puts are successful? Again, stock buying strategy, to the listeners, you want to make money trading options, buy low, sell high. You sell puts way below the market, and then you take delivery of stock at some point, and then you sell calls above the market. I mean, just try to keep that in mind. But clearly, these are funds that have dough that are interested in these stocks. And if they can't get the stock at a price they want, they are happy to take a chunk of change and, take the return. It's basically, I think they use them as kind of like a CD, right? Where they're willing to take the stock. They have the ability to take the stock. And, okay, so they have cash that's not doing anything. This is a stock they might want, but they put in a dream price. This is a dream price. I'd like to take the stock. And in the meantime, they'll keep the money. So I think as long as you trade that strategy and you understand how it's going to work completely, I mean, you've seen it work pretty well. I can't remember the last line in the sand that blew up in somebody's face. And even if it blows up in their face, you still get the stock a lot cheaper than if you would have just gotten bought in the market. So I like that as a strategy. I use it as a strategy, and I don't think there's anything wrong with it. And as I recall, last year at this time, we got a lot of shiitake grief for mentioning such strategy, I believe, in this show.
You did get some grief thrown your way for recommending selling puts, I do recall. But you're right. The data, at least over the course of the past year, I'm hard-pressed to think of a line in the sand puts that didn't pay off versus I'm also hard-pressed, probably more hard-pressed to think of a premium buy that we profiled that actually worked out. Those two do not go hand in hand. We had a lot of premium buys that worked out well initially, then the folks didn't take them off, and we all know what happens there. But yeah, it's been an interesting story. Of course, this is also a bull market, so line of the sands are going to work there. So you have to have a plan for when that bull market ends, listeners. But still, interesting stuff. We got one more to wrap up here before we keep on rolling. We're going back even farther, listeners, to March 4th, to everyone's favorite YPF Sociedad Anónima, a.k.a. YPF-SA. This is obviously an ADR. This is, if you're wondering, a vertically integrated Argentine energy company engaged in oil and gas exploration and production and the transportation, refining, and marketing of gas and petroleum products. There you go. That's a mouthful of a description. I won't tell you where they're trading right now because it's a bit of a spoiler. But back on March 4th, we profiled the April 5s. Somebody had to get at them. That's the April $5 calls going up 5,534 times for 50 cents, lifting the offer. But like today, I kind of had the whiff of something else was going on. So we dug a little bit and found many more prints. 1,782 for 65 cents, 1,310 for 59.7 cents, 1,215 for 45 cents, and so on and so forth to a grand total of 33,000 of these April 5 calls going up on the day. Seems like somebody had to get some of these bad boys, and they were paying some vol to do it. 110%, 131%, 117%. They were paying through the nose for these April 5s. Oh, good thing good thing the Viceroy wasn't here. By the way, spoiler alert, I may have heard, little birdie may have told me maybe. I won't say anymore. I'm just saying stay tuned for Option Block 1000. Going to have some fun special guests, but I digress. All right, let's go here. Looking here, 33,000 on the day. Someone really needed this thing to pop, and pop heavy and pop hard, listeners. They put these on March 4th, back when the stock was $4.42. It wasn't even that far away. It wasn't like they were looking for a crazy home run. They needed 50-odd cent pop in the stock to make these calls relevant, and then obviously more to make them pay off. But you get an aggressive pop, these will look pretty good. They unfortunately did not get that, listeners. The stock closed at $3.96, actually down almost 50 cents on expiration. Interestingly enough, though, there were 14,000 open on expiration. So you might think, oh, they took off half of them because they did 33,000. But we went digging a little bit more right before the show today. We saw that of that 33,000 that slung back and forth, there was a lot of back and forth on that strike. Seemed like some folks got inspired to come in and maybe write some of those calls because only 14,000 were net open on the strike after a lot of back and forth that day. So there was a bit of a frenzy going on that April 5 strike. It ended up with a net of 14,000 contracts open. Clearly, all the ones we profiled here were all buys, and they add up to well over 10,000 contracts. But total, only talking about 14,000 contracts net open. So kind of hard to really interpret what the heck went on with these bad boys. But that 14,000 lot that was net open at the end of the frenzy on March 4th was still open on expiration. So we can read into that a couple of different ways. If we read into that was 14,000 net buyers or so, and let's figure they got in on an average price of around 50 cents because these prices are all over the place. They're talking about $700,000 that they left on the table. But obviously that's a very rough approximation because we don't know exactly what was left of that massive maelstrom of paper going on that day. But let's just ballpark it. Is that what you think as well, Mr. Rock Lobster? It's like someone had to really have some of these April 5s, and they were left holding the bag to the tune of about $700 grand, sir?
It kind of looks like that, doesn't it? And also you're just saying, like, the premium purchase has been not the easiest purchase in the month of April. Kind of flattish markets. I think oil's moving now, but it didn't do a whole heck of a lot for a lot of the month of April. I don't know. It looks. I'm feeling this is kind of a poof. The options, they were there, and then they go poof.
A lot of our premium buys have gone poof. You know what doesn't go poof, though, listeners? It's your mail. We got a ton of it, so let's get to it.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's do it. Let's get to the Mail Block. You guys ask us questions. We sometimes turn the spotlight back on you in some fun ways, like we have been doing again of late. This week's question, find it at Options over there on Twitter, listeners, if you want to play along. We thought, let's test your long-term optimism. Let's test your Uncle Mike-ness. If you had to buy a 10% out-of-the-money call that expires at the end of the year, December 31st, on one of these four underlines, which one would it be? Gave you four choices: VIX, a.k.a. broad equity volatility, or the S&P 500. I don't care what flavor, the SPX, SPY, pick your poison. Nobody cares, just as long as you're looking at the S&P 500. Bitcoin or crude oil, going back out to the commodity landscape. I wish we could have 50 choices to give you out there, only limited to four. That's the four we gave you. Uncle Mike, we're testing their Uncle Mike-ness. So let's start with you as our resident bull out there. If you have a vote in all of this, which one is? I have a feeling I know where you're going to go, but if you have a vote, have at it. And then B, more importantly, what do you think the crazies in our audience are voting for?
I'll go with Bitcoin for me, and the audience probably picked SPY.
Really? You picked Bitcoin above SPY? Interesting. I thought your long-term...
No, I did not. That was a total
I was going to say,
SPY and SPY.
What have you done? What have you done with Uncle Mike? I was trying to be charitable.
Just making sure you're listening.
You threw me off my game there for a second, sir. So well done to you. I tip my Deer Stalker cap to you, sir. Mr. Rock Lobster, same question for you. What do you think our audience is voting for, and what are you feeling out there, sir?
I was about to say he's picking Bitcoin. To be honest, I don't think we're going to see 10% out of the S&P 500 this year. I think we're going to see it out of oil, though. I say crude up 10%. I think the audience is choosing Bitcoin.
You have been a crude bull for a while here. Let's see if the audience agrees with you right now, listeners. You got about a day left on this poll, so folks listening to the podcast will have time to vote, and you'll have probably enough time if you're listening to Vol Views tomorrow as well to get in there if you haven't already. At Options to make your voice heard. Right now, it is Bitcoin leading the dance. Uncle Mike's favorite, 33.3%. So exactly a third of you going the Bitcoin route, followed by 28% for the S&P 500, 22.6% going the Rock Lobster route of crude oil. No love for VIX, only 16.1%. We have other people chiming in. Mr. Uncle Mike, obviously they're a fan of yours because we have Tin Man John 64 chiming in saying silver is better than all of these choices. So Uncle Mike, if we had added silver to that mix, would you be picking silver, sir?
Sorry, I was muted. No, I would still go with the S&P over silver. I think we could still get another 10% out of the S&P this year. There's a whole lot of normally I would say there's a whole lot of football to be played, but there's a whole lot of S&Ping to be done.
A whole lot of S&Ping to be done. I like that. Neil, our buddy Neil Wales, who's been eerily prescient on his VIX picks for the last few years. He agrees with you, Mr. Rock Lobster. He says, I'm going for crude oil. So there you go. That's what makes a market. That's what makes these kind of polls kind of fun, because the audience and clearly the market is very split right now, which makes it kind of fascinating. Get on over there at Options. Make your voice heard if you haven't already. Next up, we got Sheldon Jordan chiming in. Seems like everyone's piling on Robinhood these days. He wants to know, why is Robinhood closing out options positions that are not in the money and causing me to be a pattern day trader? Been trading for 18 years and never had an option called upon me. Position would have expired worthless. yet they placed a trade to push me over the limit. Why? Does Robinhood think that everyone on their platform has no experience? Well, this is the first. I've heard many and legion complaints, a myriad of complaints about Robinhood from our users here, Sheldon. I've never heard this specific one, that they are somehow pushing you into the, I'm not sure what they would stand to gain from that, because they want you to trade. In fact, that's kind of been the blowback against Robinhood, even from recently. SEC, the new incoming chair of the SEC, Gensler over there, slamming Robinhood. I think it was this morning. He doesn't like the way they're gamifying their platform, which he says they have game-like features on their platform, such as points, rewards, leaderboards, bonuses, and competitions to increase engagement. Many of these features encourage investors to trade more, while some academic studies suggest more active trading or even day trading results in lower returns for the average trader. I think we can all take issue with that last part of his statement. But then again, it seems like Robinhood is leaning the other way, getting people to try to trade more. I'm not sure what they have to gain by shutting you down, Sheldon, but we'll look into it. I don't know, Mr. Rock Lobster, is this anything you've heard about from any of your crazies? Have you heard any complaints along these lines about Robinhood? And then B, perhaps more salient, this is kind of a pushback I've been hearing for a while now, not just from Gensler, but other parts of the industry, of this gamification of options trading. And perhaps places like Webull, places like Robinhood, some of these other newer brokers have gone a little bit too far down that rabbit hole, sir. What are your thoughts?
The problem is when it doesn't, there's no transaction cost, right? I mean, you have to be realistic here. Like, there's almost no transaction cost to trade options. So what are you going to do? It's like when you give stuff away. It's going to encourage trading. So do they encourage trading? Sure, 100%. Is it bad? Who knows? It's like the internet. You can do whatever you want on it. Is it bad? It depends if you overuse it, right? So I think a lot of people, like talking about like line in the sand puts, same idea. Like TOSAW knows how to use them. I know how to use them. Yeah. I think the problem where a lot of people have come to us where they overuse them, right? They're like, they go all in, they don't have the margin, the thing blows up, and then they're screwed. You have to understand how the products work. And I don't know, Robinhood seems to spend a lot of time on making it more fun and game-like, and maybe less on actually educating people on how to use the types of trades and the types of products. So I don't think that's necessarily good, but they got 4 million people using Robinhood. But like I said, the price is right there. It's free to trade, and people are going to use it. So I'm not super. As far as if so, this is what I also tell my students. I can't understand what you're doing if you don't tell me exactly what got assigned. Like, okay. They just don't close out positions for no reason. There's always a reason. So if they're closing positions out for you, possibly because of margin, there's usually a reason behind it, unless there's a glitch in their software somehow. So I would love to hear more about it, but I would have to know exactly what the situation is, because, let's say there's a lot of options. It could be a lot of things that made a position close. So that's what I would want to know there. Like, I need to know the specifics, basically.
Yeah, there's always more to the story whenever people come into us and complain about something. There's always another side to that story. What does leave me a little bit concerned and give me a little bit of pause is the new incoming chair of the SEC saying some academic studies suggest more active trading or even day trading results in lower returns for the average trader. Is the chair of the SEC saying he wants everyone to just flock into a passive index fund? Is that what he wants? He should know better. I met Gensler a few times. I'm going to say this does not surprise me from my interactions with him that he would say something like this. But the incoming chair of the SEC should probably know a little better. Let's keep on rolling here to Scott Somer, another regular listener over here. He sent a link to the big brouhaha going on about CME right now, closing their big S&P options pit and rolling all of that into the E-mini options pit going forward. He wrote in to say he did not think they would shut down before SIBO did with their VIX and SPX VIX, and he put not in caps. I don't know why you thought that, Scott. I had the exact opposite impression from everything CME has been doing and saying over the course of the past few years. They've really not shown a strong interest in continuing the floor trading operation. I mean, they've already shut down a large portion of it, whereas Cboe has repeatedly maintained their commitment to SPX and the floor. It's what their biggest product there with the VIX, right? So they clearly have a vested interest in that game. CME, not so much outside of Eurodollars, which still has, a legacy floor presence. So this doesn't surprise me at all. We'll get more information about this, though, in a little bit, coming up on TWIFO, when we have Tim McCord, who runs the equities over there at CME, joining us for all things TWIFO. All right. Unfortunately, listeners, that music means we've been gabbing on for a bit about Robinhood and everything else out here. So we got to keep on rolling. So we'll do a combined around the block as well as what you are watching for the rest of this week. We'll start with the Uncle List of Mikes. Mr. Uncle Mike, sir, what are you watching for the rest of this week until our Monday episode, A? And then B, if folks need a little handhold and a little insight, a little advice in these markets, where should they go? What should they do?
Watching to see if silver can continue to have can break through a little bit, like to see if it can go to the upper 20s. Also watching the SPX, seeing if we can make another run at the 4,200 level. All those things are possible even tomorrow. And seeing if we continue to stay at the levels with which we are for the 10-year note with the yields. In terms of where they can go, you can follow me on Twitter at Mike TOSAW. And if you're looking for a financial advisor who delves in the option product quite frequently, check me out, stcharleswealth.com. I'd love to have a conversation with anybody.
Are you getting back on the boat with the 10-year note, sir?
Oh, you know it.
You and your 10-year note. You want to know more about all things 10-year? stcharleswealth.com is the place to go. You can have a scintillating 3-hour-long conversation with Uncle Mike about all things 10-year note. If you want to talk to Volman, you got to go through his translator, which is the Rock Lobster. Mr. Rock Lobster, A, what are you watching for the rest of this week, at least until Vol Views tomorrow? And then B, if folks want to talk to Volman, where should they go? What should they do?
Well, come on over to optionpit.com. You can check out my @OptionVol on Twitter. And to check out all of our weekly education. So we teach people how to use options, how they work. We have all kinds of cool products with trade ideas and how we manage those trades. So pop on over to optionpit.com. And what am I watching? Again, very troubling. I'm not going to say troubling. It's just uncorrelated movements between vol and the SPX. So it's kind of oddball action. I don't know why, but let's just say a little peak of the Sith. I think the Sith again. They're coming back and trying to sneak their nose under the tent, so to speak.
The Sith are coming back. If you want to learn what to do, how to fight them with their double-bladed lightsabers, you know where to go. Optionpit.com is the place to go. And on behalf of the rockingest of lobsters, the uncleest of Mikes, and indeed myself, thank all of you out there for downloading, streaming, subscribing, for voting in our polls, for listening live, for sending in your questions and your comments. We love to hear from all of you out there. And we'll see you back here in a little bit for TWIFO, coming up in about exactly a half an hour. Back again tomorrow, noon Central, 1 p.m. Eastern for Vol Views. And then it all kicks off again on Monday, another episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.